all these rejections from the middle Bollinger Band.
Resistance we're going to need.
If you actually see here, we get a
And we'll look for a healthy higher
I
low.
would not
don't have
be
the
convinced
full
to
back
enter long trade.
Hello everyone, today I'm going to do a video talking about technical analysis and the similarities to poker, why I feel that poker players have an advantage to learning technical analysis if they are good poker players and can manage their risk to reward and emotions, which are so important for technical analysis, and also want to talk a little bit about my history. So I started playing poker long before I started trading stocks, and I was playing poker, ninth grade, I believe, is when that wave of World Series of Poker swept the nation and the TV, and it got popular. So that's literally starting about 6 years before I started trading stocks. So I traded poker in high school. I played free rolls all the time. I would come home from school and play a free roll on Poker Room every single day, and I won it a couple times for $100, which was a big deal. And just the fact of beating a few thousand people who most of the time didn't care, but I would take it seriously and I would use it as practice. So then from there I progressed and played live with buddies and friends in high school and college, and played online a lot. And in online I would play buy-in, and I would play bigger tournaments, and I would satellite into tournaments. So I won a few $10, couple thousand people tournaments, and then I would pay $50 to satellite into a $500 tournament. Ended up coming in third that, so made $6,000. So ended up making some nice profit, but I would just put that right into stocks. Once I was trading stocks, that placing I had for $6,000, all of that profit went right into my stock account. So ended up compounding poker gains in stocks and trading for quite some time. But also went and lived in Vegas for a while. I lived in Vegas for a month or two and played some live there and played online there. It was really cool that you could just cash out and go right into the casino and pick it up that day or later that day. And that was huge and new, because getting your money off of these sites has been a really big issue for US players for the last decade. And just now with, legalization in certain states, it's getting a little bit different. But all in all, I chose poker. I chose technical analysis and stocks over poker. And I can't do both, because if I did, I would go completely insane with the amount of screen time and just not enough time in the day to do both things. So let's go over a little bit of how they're similar, how they're different, and my, reflection on it. So analogies that I use when I'm talking about technical analysis, I always say you don't go to Vegas to learn to play poker. And what I mean by that is you don't just jump into the stock market to learn how to play with real money. That would literally be like going to Vegas and sitting at a table and putting your money on the table, knowing not how to play cards and saying, all right, let's learn. And it just seems so dumb when you talk about it in this regard, but still people do it all the time in terms of just starting to trade stocks and putting some money in and going right for it without any education whatsoever. And obviously it's not going to end well if you do that. I also compare how technical analysis is similar to counting cards in blackjack. So when you're counting cards in blackjack, you don't know what the next card is going to be, but you've counted the cards that have already come out of the deck, so you know what the percentage odds are of whether it's a face card or not a face card. So in that instance, giving yourself a slight advantage of having the odds in your favor is similar to technical analysis. And if you add up time and time again over the long term, that's when it starts to work in your favor. So you can have, counting cards in blackjack, you can have a losing streak for a while, but it's just knowing that the odds are in your favor more than 50%. If you do it 10,000 times, it does start to add up. So it's the same thing with trading. If you have put yourself in a situation where it's more likely than not to see continuation, even though it's not going to see continuation every time, if you keep playing that same trade and keep managing your risk, then it is going to end up working out in the long run. So the similarities between the two and what makes a good poker player a good trader and vice versa: risk management and discipline. Obviously, if you have no risk management and you're playing poker, you're going to go all in and lose your stack pretty quickly. Same thing with stocks. You're going to blow up your account if you do not have risk management and discipline to be able to overcome emotions. And everybody knows about going on tilt. If you cannot overcome your emotions, you go on tilt and you blow your stack. It's the same thing with the stock market. You have to control those emotions. You have to be able to wipe the slate clean with every hand or every trading day and start fresh the next one. Math on the fly, obviously that helps. Here trading stocks, you can have a calculator out and open, which helps things, but just being able to know probabilities and numbers off the top of your head, knowing the position sizes and number of shares you want and things like that without needing to take the time to do the math to figure that out, it saves you a little bit of time, and that does add up over the long run. Probabilities, as I mentioned, knowing which situations are favorable, putting more capital at risk in the more favorable situation. So if I have pocket aces, I'm going to be willing to risk a lot more of my stack pre-market than I would be if I had a lesser hand. Same thing, if I have a blue sky breakout, I'm going to be willing to risk a lot more of my stack than if we were approaching a key resistance level. And of course, emotional control goes along with risk management. If you cannot control your emotions, if you get bad beat and whine about it all the time, I have no idea how Phil Hellmuth is a profitable poker player. If you just showed me some of his videos, I'd say, yeah, that guy's got a couple more years and he'll be broke. But props to him, that's not the case. But most people, when you're that emotional and you let little things get to you, and that doesn't add up to a long-term career. You have to be able to, these kind of things have to be duck on a back's water off a duck's back, in terms of being able to just completely forget it and move on and not let that previous interaction have any outcome or any effect on the outcome of the next situation. So people like to say, if technical analysis were real, if technical analysis were useful, everyone would do it. That's like saying poker is all luck. If you could make money consistently playing poker, everyone would be doing it. That just sounds silly to say. And my analogy for that is always, if you could have a six-pack from working out, everyone would have a six-pack. And that sums it up right there in terms of a comparison. And the reason everybody doesn't have a six-pack is because people don't have the time, dedication, motivation to do it. Yes, if everybody wanted a six-pack and had the time, dedication, and motivation, everybody could have one. But that's not the case. People do not have the time, dedication, and motivation, so they don't all have six-packs. It's the same thing with poker. It's the same thing with technical analysis. If you're not going to put in tens of thousands of hours, and if you're not going to make this a life goal of yours, it's not going to happen. So to say, yeah, I'll try to become a professional poker player and I'll play a few hours every week, it's not going to work out. If you want to become a full-time trader and you're trading, an hour or putting in an hour or two every week, it's not going to happen. You have to completely devote yourself to giving this a chance and putting in a ton of time in education and experience and building up that education and experience to lead to confidence and then long-term longevity in whatever avenue you choose to do, both poker and technical analysis. So again, yes, there is luck involved, no doubt. If you get a big bull break and you're in a full position, that can be a good situation. If you are all in with a lesser hand and you can win, that is a good situation. That's not always going to be in your favor. But again, we're talking long term, over decades playing out, and you have to put the time in. And no, it is not all luck. And yes, it is used for full-time traders. You can talk to a whole bunch of them that use technical analysis and have been doing it for many, many years and do not have a job because of that. And to say that that's just luck, those are really lucky people, is just ignorance, in my opinion. And it's the same thing for anything. You don't become a doctor by just giving it a shot for a few hours every week. You put in tens of thousands of hours of education, a ton of time and dedication, and you can become a doctor. It's the same thing with anything in life. Similarities to poker. So if you put yourself in favorable probability scenarios, that leads to profit. So if you know risk to reward and you can keep a tight leash on the amount of losses that you have, and you can wait until favorable probability scenarios to go in heavy. In terms of trading, I always talk about, wait for the high hype markets, the MJ markets, the crypto booms. That's when you're very aggressive. You're going all in, or at least I'm going all in because I'm very comfortable and I am using significant capital. And then when the probabilities scale back and it's an unclear situation or it's a choppy market, I'm trading way less and I'm protecting my capital in that less favorable scenario. So being able to recognize high probability scenarios and then act on them is essential to both poker and trading stocks. Every card or every candlestick gives you more information and it shifts the odds of the likely outcome. So if I'm chasing a flush and on the flop, I got 2 hearts and I got 2 hearts in my hand, and then the turn comes and it's not a heart, the odds that I'm going to hit my flush significantly decrease. If I'm trading a breakout and we get a nice clear breakout, some solid bull volume, and then the next candlestick has a big upper wick and a lot of bear volume and we pull right back down under the breakout level, that's the potential scenario of a fake out, and that's a scenario where I would want to limit my risk because, again, I have more information now. That new candlestick shows me a lot of selling pressure that wasn't there the previous candlestick, so I need to be able to react to that and recognize that new information and incorporate that into my game plan, just like a poker player would do with every new card that comes out. Also, it's important to know that you can have a 90% favorable situation and still lose. So I can have a situation with a blue sky breakout stock and a pattern that I have seen play out time and time again to favor the bulls, and it could just not happen. And that we have to realize that that is a potential case, and it doesn't mean to change a game plan. You know, if I have that same setup and it's going to play out 9 out of 10 times, I'm going to play it the same way 9 out of 10 times, and just 1 out of 10 times, it's not going to work out for me. And I'm going to limit my loss and then wait for the next time and play it the same way. It's the same thing with poker. If you have pocket aces, everybody who played poker for more than, a year has lost with pocket aces pre-market. And that doesn't mean you're going to fold pocket aces pre-market next time around. So we have to come to the realization that, high probability situations are great to get in, but it's never a guarantee. And there are going to be times where high probability does not work out and where low probability does work out, but we cannot shift our game plan to cater to that. We have to stick with the probabilities and trust that over time and over a large sample size, they're going to play out in our favor. Emotional control, obviously we cannot stress this enough, have to be able to control your emotions and move on from a situation to the next situation without having it negatively affect you and without letting it throw your game off. And if it does, that's when it's time to stop and time to walk away and come back for a while. If you are in a poker tournament, you're playing for 5 hours and you're really deep into the tournament, and then right before the bubble, right before the placing of money, you get busted and you lose on a bad beat with pocket aces all in pre-flop, then that's going to sting. That's the kind of scenario where I would take a couple days off and clear my head and then get back into it. Because if I go right into the next day with that kind of mindset, I see so many people in poker in negative cycles. I always get bad beat. This always happens to me. I get bad beat more than anybody else. It always happens. And it's just not a legitimate scenario. It's not reality, but it seems like that because their perception is in this negative state of mind, and all that does is just compound itself into more negativity. Another thing I always say is I could take technical analysis to different people. I could teach them the exact same thing, the exact same examples, material, everything. One of them could turn out to be a very profitable trader, quit their job, do trading full time, and live on the beach. The other one blows up their account in a month. That can absolutely happen, and it is based on the individual and their ability to emotionally control themselves and not necessarily the teachings. So if I tell somebody that we have to have a stop loss on every single trade, that's rule number 1 of trading to manage our risk, and trader 1 always puts a stop loss, and so they do well and they understand that and they're able to have the discipline to follow these rules, they're going to do well. And trader number 2 doesn't put a stop loss in his trades and doesn't listen to rule number 1. So he's heard the exact same teachings that I have given the 2 people, but he's not applying it. And that happens all the time. And it's just psychology. And some people are able to follow these rules and some people are not. Same thing with poker. You can teach 2 people to play poker. If you had a school of 5 best poker players in the world and they're teaching a classroom of 10 people and they're, randomly selecting 10 people to say, hey, I want to learn how to play poker. Some of them are going to learn to do it really well, and they're going to learn to play poker and be able to profit from it in their lives. And other people are not going to be able to, and they're going to have a net loss on their lives playing poker. And again, it's not because the teachers, were favoring one student over the other. It just has to do with the ability of the individual to be able to absorb the data and then apply, or I should say absorb the information and then apply it to their own trading. So stocks are the winner. Why I chose stocks rather than playing poker to pursue full time to have financial independence. The biggest factor is the game is the same no matter what dollar amount you play with. So if I'm playing with a $10 buy-in tournament, the skill level of the players is going to be significantly worse than a $100 buy-in tournament, which is going to be significantly worse than a $1,000 buy-in tournament, which is going to be, you get it, $10,000, so on and so forth. The competition gets harder, the game gets harder, the more you up your game. So if I want to do this full time, I'm going to have to be playing with some very serious, really good players. Whereas at the stock market, I am currently making the exact same plays and the exact same trades that I made 5 years ago, but because I am using 10 times more capital, the profit is way bigger. The game is the exact same. There's some small differences in terms of being able to scale in and scale out of your position sizes and making sure there's enough volume and liquidity to be able to do that. But in terms of the skill of the game, a blue sky breakout is a blue sky breakout no matter what dollar amount you're playing with. So that is the biggest advantage. The fact that I can do the same thing with, $1 million that I can do with $10,000 and just see 1,000% more profit on every single trade. That is a very significant difference that favors whales and it favors the big boys. And it's why the stock market is skewed to favor large money. But if you can compound your profits and get that money up there, then again, it's very easy, in my opinion, once you get to a certain point, to be able to have your game plan down, have your capital continue to increase as you're compounding profit, and not have things get harder as you're doing that. I also like complete control with stock. So if I'm trading, if I'm playing poker and I'm in a no limit tournament, obviously my chips are at risk, my entire stack on every single hand, and I can choose to fold, but I don't get to see the play pan out if I choose to do so. That's to the degree similar to a stop loss. But one thing that no limit does is I can get into a hand and want to see it play out, but another player can force me all in and force me to put everything on the line to see it play out. Whereas with a stock trade, I can set my stop loss, I can set my sell target, and then I can just patiently wait for the trade to play out. And I'm in complete control at that point. Nothing changes. I know the exact amount that I can lose on the trade, and I know the exact gain that I stand to make. Whereas if you're playing poker, you don't know the exact amount you stand to lose on any trade. Obviously, your entire stack is at risk, but depending on how much that person is going to make you pay to see the following cards, that definitely is an area where you're relinquishing that control to a certain degree to someone else, and you have to, react to what they're doing in order to play. Less bad beats. So in my opinion, less bad beats meaning just that sickening punch in the gut feeling. So again, you can be in a scenario where you're extremely favored to win, you're all in, and then that river card comes and it crushes your hopes and dreams. That doesn't really happen in stocks because again, I place my stop loss order and I say if this trade doesn't pan out and it hits this stop loss, that's fine. I have a small loss, it was nice and controlled, and I move on to the next trade. I have never had a punch in the stomach feeling for getting stopped out of a trade like I have for 100 times playing poker. It happens all the time playing poker, and it's a feeling that I don't get when trading stocks, and that's because there's no surprises. There's no river card surprise where I know exactly what I'm going to risk, and if it hits my stop loss, no biggie, move on to the next trade. So I like that aspect as well. And again, way more opportunity in my opinion. The fact that you have so many different markets you can play, you can learn futures, you can learn options trading, different sectors, different, new opportunities with MJ and crypto and all these things. I definitely like trading way more for the opportunity. There's never a dull moment. There's always opportunity. If you're trying to play live poker, you have to wait for the tournaments to come to town. You have to wait for the World Series of Poker event once a year. If you're playing online, you're limited to places depending on where you live. Perhaps legally you're limited, but you have to wait until the bigger tournaments, maybe on Sundays. So in terms of opportunity, I think there is way more opportunity with trading stocks than there is with playing poker. So that's basically the summary and the comparisons that I make. There is no doubt in my mind that my early 6 years of trading or playing poker before I ever started stocks or trading contributed to my ability to pick it up and helped. I have no doubt about that. Again, emotional control and risk to reward. So when you're learning technical analysis, the book part is easy. The book part of learning in terms of what is this candlestick? What does this candlestick shape mean? What is the RSI? What's oversold RSI? That's all book learning. And anybody that is familiar with, high school or college learning can do that. They can set an organized, regiment of things to study and time to put in. That's the easy part. It's the emotional control and the psychology that's not concrete. It's not in front of you on a piece of paper and something you need to memorize. It's something you need to find within yourself, and you need to react to yourself, and you're getting in touch with your ego, and it's a whole lot deeper of a dive than just looking at a book and absorbing information. So that's where the most traders are lost, in my opinion. It's not the fact of the information and it's hard, there's so many candlesticks I need to memorize. That's not really it. It's the fact of being able to am I going to put a stop loss on every trade? And if I'm not going to follow the rules, I'm not going to be in this game very long. So I appreciate you watching. Feel free to comment and ask any questions, give your own kind of feedback and insight. I know there are tons of poker players and crypto traders out there. We had one member who was the #1 poker player in Italy for a while, and he came into the crypto room for a while as well. So there's definitely a significant overlap there, and let's hear it.